The biggest investing mistake isn't picking the wrong stock. It's believing the future will unfold exactly the way you expect. Ray Dalio built one of the world's most successful hedge funds on a simple but powerful idea. No one, not even the smartest investor, can predict the future with certainty. And once you truly understand that, you'll never look at investing the same way again. Today, we're exploring the power of diversification, according to Ray Dalio, why he believes it's one of the greatest tools for building long-term wealth, and how this single principle has helped investors survive recessions, market crashes, inflation, and economic booms alike. By the end of this video, you'll understand why protecting your money can be just as important as growing it. Imagine you're preparing for a long journey across unpredictable terrain. Some roads are smooth, others are flooded, and some disappear altogether. Would you rely on one vehicle for every situation? Probably not. You'd want different tools for different conditions. Ray Dalio believes investing works the same way. The economy constantly shifts between periods of growth and recession, inflation and deflation, optimism and fear. No single investment performs well in every environment. Many investors make the mistake of putting most of their money in what has recently performed best. When technology stocks soar, everyone wants technology. When real estate is booming, it suddenly seems like the safest investment in the world. But history has shown that today's winners can quickly become tomorrow's disappointments. Markets are cyclical, and confidence can disappear overnight. Dalio's philosophy begins with humility. Instead of asking, "What investment will make me the richest?" he asks, "What if I'm wrong?" That question changes everything. Diversification isn't about expecting every investment to succeed. It's about accepting that some won't, and making sure those setbacks don't destroy your financial future. One of Dalio's most well-known ideas is the all-weather portfolio. The concept is remarkably simple. Build a portfolio designed to perform reasonably well across many different economic conditions, rather than trying to predict which condition comes next. Instead of placing all your hopes on one asset class, you spread your investments across assets that often respond differently to changing markets. While one investment may struggle during inflation, another may benefit. When stocks decline, other assets may provide stability. The goal isn't to maximize returns in the best years, it's to survive and continue growing through the worst ones. History offers powerful examples of this philosophy. During the global financial crisis of 2008, many investors who concentrated their wealth in a single sector experienced devastating losses. Others who owned diversified portfolios still faced declines, but their losses were often less severe, allowing them to recover more quickly as markets rebounded. The same lesson appeared during the COVID-19 market shock. Diversification didn't eliminate risk, but it helped many investors stay invested instead of making emotional decisions at the worst possible moment. This brings us to another lesson Ray Dalio emphasizes. The greatest threat to investing often isn't the market, it's human psychology. Fear encourages people to sell after prices have already fallen. Greed convinces them to buy after prices have already risen. Diversification acts like an emotional safety net. When your portfolio isn't entirely dependent on one investment, you're less likely to panic when markets become volatile. Think about nature. A healthy forest contains many different species of trees. If disease strikes one species, the entire forest doesn't disappear. Diversity creates resilience. Dalio believes your investment portfolio should work the same way. Resilience isn't exciting, but over decades, it's often what separates lasting wealth from temporary success. This doesn't mean diversification guarantees profits or eliminates losses. Every investment carries risk. Markets will always experience uncertainty. But diversification acknowledges a timeless truth. The future is impossible to predict with complete accuracy. Instead of betting everything on being right once, you prepare for many possible outcomes. For everyday investors, the lesson is both simple and profound. Focus less on chasing the hottest investment and more on building a balanced portfolio that can withstand life's inevitable surprises. Long-term wealth is rarely built through spectacular predictions. More often, it's built through consistent discipline, thoughtful risk management, patience, and the willingness to stay invested through changing economic seasons. Ray Dalio often reminds us that successful investing isn't about having all the answers. It's about preparing for the questions the future hasn't asked yet. And perhaps that's the greatest power of diversification. It allows you to keep moving forward even when the world doesn't go according to plan. If you found this lesson valuable, subscribe for more timeless investing wisdom from history's greatest investors, and share this video with someone who's building their financial future one smart decision at a time.